Hello traders and welcome to the London Forex Broadsheet's daily wrap of the markets for Wednesday, October 15th. The euro has seen fairly wide ranges of trade during the past couple of days. The 1.3600 area has become a very important swing point for the pair's action during the last 2 weeks. During the overnight session, the pair dropped to the LFB R1 at 1.3550 but recovered during European trading hours. Once in New York, the pair range traded until the poor U.S. retail sales report caused traders to close carry trade positions. In August, the German CPI fell by 0.1%, which was in line with market expectations. This is the second time when the CPI has shown deflation since April, as the high cost of energy has caused inflation to rise to record levels. Inflation fell in September to 3.6% from 1 year earlier, which was in line with the flash CPI forecast. The euro is seen here approaching support that has held several times in the past at 1.3450. If this level is broken, it could be a quick fall to 1.3250. The RSI on the hourly chart has broken out of the 50 area where it has been stuck since last week. The pound traded virtually flat during the overnight sessions, strengthening slightly at the close of the Asian session. Compared to the euro and the Swissy, the pound is the only European-based currency that did not fall against the dollar since the US session closed on Tuesday, even though yesterday's trade saw the three pairs move in tandem. Once in New York, the pair declined as the market grew risk-averse. The unemployment rate increased again in the UK in the latest 3 months to August 2008. The released number of 5.7% is higher than market expectations of 5.5%. The sterling can be seen here approaching support after a 460 pip fall in afternoon trading. Support can be seen at 1.7160 and after that is 1.6775, which was seen on the 9th of October. The RSI is almost in oversold territory, but even once reached does not mean the selling will let up. The Aussie fell 140 pips during the Asian session, but recovered almost every pip during the European session. The pair is now at the mercy of carry trades, as the high swap rate the Aussie pays makes it extremely vulnerable to risk aversion. The Aussie will strengthen only if the equity markets continue to trade in positive territory, which they did not in New York after U.S. retail sales declined for a third month. Australia's economic activity had an expectation of annualized growth of 2.5% in the month of August, reports the Westpac Bank Melbourne Institute. The leading index was down from an expected growth of 3.3%, which was forecasted in July's survey. This is well below the long-term trend of 4% annualized growth. These are the weakest readings seen since the third quarter of 2002. The Aussie gapped 300 pips this week, and it looks as though the pair may be looking to close that gap soon. The pair has seen slight support around 65.45, and it would only take 50 pips to close that gap. After that, support is seen at 64.30 and 63.30. The RSI is almost in oversold territory, but again, even once reached, it does not mean the selling will let up. The Swissy moved in a tight range, staying close to the 1.1350 level, which lately has become an important swing point. On an intraday basis, the Swissy managed to break above the high of Tuesday's trade since the early Asian session opened, but did not manage to move anywhere from that point. It seems that this has become the pair's pattern of trading, at least for the past few weeks, content to hover around support and resistance levels. The pair remained in a tight trading range during the New York session. The Swissy has yet to break out of its ascending triangle. This formation usually breaks in the direction of the horizontal line. However, volume as well as ATR has been decreasing gradually, while the daily RSI has found a channel right around the 60 line. The CAD moved an impressive number of pips during the overnight session, as the trading range reached 140 pips, but as we headed into the US Open, the pair was trading virtually unchanged from where it closed in Tuesday's US trading. Once in New York, the pair rose as crude declined over $3 per barrel. The loonie fell to its ascending trend line and appears to be forming an ascending triangle. This type of formation usually breaks to the horizontal line, and there are likely to be many buy orders stacked just above it. The yen traded lower in the overnight sessions as the market was again in risk aversion phase. The pair fell to the LFB S1 at 101.40 but was not able to break lower. The pair declined in New York as the S&P fell over 5% on the day. Japan's industrial production tumbled 3.5% in August as the market expected. Compared with 1 year ago, industrial production fell by 6.9%. In August, Japanese industrial production decreased for the first time in 2 months. The yen is still stuck in this 600 pip wide range with resistance at 103 and support at 98. The RSI on the 4-hour chart is confirming a move lower. In Asian equities, the Nikkei rose 99 points or 1.06% to close at 95.47. The Australian S&P ASX slipped 35 points or 0.81% to close at 4,300. In European stocks, the German DAX tumbled 337 points or 6.49% to close at 48.61, and the UK FTSE fell 314 points or 7.16% to close at 4,079. On Wall Street, at the close of floor trading on the New York Stock Exchange, the Dow was at 85.72 after losing 738 points or 7.93%. The S&P barely managed to stay above 900, closing at 907 after a loss of 90 points or 9.06%, while the Nasdaq finished the day's trading at 1628 with a loss of 150 points or 8.47%. Crude oil for November delivery was down 4.93% to close at $73 per barrel. Gold for December delivery was down 1.27% to close at $844 an ounce. In Treasuries, the 2-year notes yield fell 23.6 basis points to 1.584%, while the yield on the 10-year note fell 9.3 basis points to 3.982%. Overall, market sentiment was damaged by a third month of contracting retail sales and Federal Reserve Chairman Ben Bernanke, who said the government's effort to calm financial markets and stem the credit crisis probably won't result in an immediate economic rebound during a speech at the Economic Club of New York today. Speaking from the same prepared remarks used yesterday at the official announcement of the government's new initiatives, Mr. Bernanke pledged officials would, quote, not stand down until we have achieved our goals of repairing and reforming our financial system. The 1.2% fall in September's retail sales, the largest decline in 3 years, followed a 0.4% drop in August, which was worse than previously estimated. The Producer Price Index fell 0.4% on a seasonally adjusted basis in September after falling 0.9% in August. It was the second straight month of declines in the headline number. The Empire State Manufacturing Survey indicated that conditions for New York manufacturers deteriorated significantly in October. The General Business Conditions Index dropped 17 points to a record low of negative 24.6. This concludes the London Forex Broadsheet's daily wrap of the markets. We appreciate you making us part of your trading day.
All contents of the LFB are for informational purposes only and should not be used as a replacement for research by an individual investor, trader, or licensed investment professional. Neither the LFB nor any of its affiliates shall be liable for any errors, omissions, or for any actions taken in response to the information contained herein. We hereby make no representations or warranties regarding the accuracy of any information contained in this broadcast or on our site. Forex market trading involves special risks and may not be suitable for everyone. Each investor or trader should assess their financial situation and risk tolerance before proceeding. Copyright 2007, LFB Services, LLC. All rights reserved.